I'm Dr. B, and yes, I'm a real ER doctor, so you may be wondering, what am I doing here in this space? Well, after years of pain from sports injuries, I listened to my doctor and had to pivot into a career that would keep me off my feet as much as possible. I also have a degree in finance, and so it was a natural transition to join Verified Investing. I'll share my prescription for becoming a successful investor right here on the Market Pulse. Welcome to the Market Pulse. I'm Dr. B here at Verified Investing, and today we have a special guest on the show, Drew Dusk. Okay, he is the Director of Business Development and Pro Trader here at Verified Investing. He is specializes in technical analysis, market cycle identification. He's certified in Gann theory and gap analysis, and offers a unique perspective on the financial markets. So, Drew, welcome to the show.
Hey, thanks so much for having me, Dr. B.
Of course, yeah, thrilled to have you
here. Yep.
So, Drew's a new trader on our floor, and he brings years of experience, tons of insight. And today we're going to go through his recent trades, and also at the end go through an outlook about the market, right? The overall market.
Sounds good.
So, Drew, what are you looking at today?
All right. So for the first trade, this is going to be a little bit of a recap. Last week, touched on Intel and what I was thinking about what would happen today, and sure enough, it is. But this is going to be a recap of a trade I took last week. As you see, here's the Intel 10-minute chart. So we drop it down a little bit better for you in this view. And you notice that we have, kind of an awkward head and shoulder pattern that's developed after their massive fall. Now again, Intel's had terrible news, so we were wondering where price action is going to bottom, or at least find a base for the short term. I saw this pattern developing with this lower low, but then price pattern was coming back down on the 12th, and it was going to retest this low, as well as this chop action we saw right before the final and major flush out of the most recent low. So what I did is right here I executed a trade of 550 shares, and I got them for $19.28 right here at the pivot towards the end of the day. The very next day, look at the price action that happened. Price catapulted all the way up to this previous pivot point high. I went ahead and closed out 200 of my 550 shares at this location, which was at $19.92. I remained to leave the other 350 shares to ride, took profits on them at $20.45. Because then once this pattern started moving up, I realized what was happening, that this looks like a greater overall head and shoulder pattern. Now the reason I sold up here was because this trend line right here was going to provide resistance. So was it going to get through on the first shot? I wasn't sure, but I did know that this was a great place for me to take profit. I already had two trades that I executed to take that profit. What happened afterwards, price did come down, as you see, and has since now broken this head and shoulder pattern. We now have a targeted move. I scroll out from the charts a little bit more with this head and shoulder pattern. You're going to be going above the gap window where price first fell down with the Intel stock up to about $22.20. Now, does it guarantee price is going to get there? No, not at all. But what's so neat about this pattern that I found is that it was confirmed when this pattern broke out of the head and shoulders. What did price do? Price came right back down, retested this level right here.
There you go. Yep.
I
know it's a little funky there. Yep.
Yeah.
Try there.
Right here, it retested, and that's when I knew this head and shoulders line was a very valid and accurate analysis for this chart, because it did provide the support that Intel needed to continue higher. Now, one thing I was watching as well is if price started to sell beneath this headline or this head and shoulder neckline, then price was going to eventually start to come back down. So this was a major bounce that I saw in the charts that was providing more upside for Intel. This is something I brought up on the bottom line on Friday. So for anybody that was in Intel and still is in Intel, they're having a great day today with that move up.
Drew, that's great analysis. So let's zoom out here and let's take a look at the bigger picture.
Okay.
So if you look at the weekly chart, right? So Intel was trading up here around $70, came all the way down to around 21, it's trading at 21 now, but it was around what,
Like
18, $19.
Yep.
And if you zoom out further, you can see that this is close to the Great Recession lows here, okay? What's really interesting is in the Great Recession lows, you see an inverse head and shoulders pattern right here that was the lows of the chart, right? This is the lows of the chart. Typically, we're looking for inverse head and shoulder patterns, right, at the lows of the charts, okay, versus head and shoulder patterns at the highs of the charts, okay? This should be at the highs of the charts. So that's kind of something I wanted to point out. So Drew was saying, whoa, this is at the lows of the charts. We've got this inverse head and shoulders pattern. We've sold off from $70 to, let's say, $18, $19. And now look at where we are. This is a great, solid company. You know, it's Intel, right? Solid revenue, solid earnings. It's a staple of the American economy.
Yep.
And so why don't you go back into your 10-minute. We'll take a look here at how you traded that again.
All right. So basically, as I mentioned, I was isolating this level right here that you see, which is this level. This was the area that I was really looking for as far as what price action was going to do. And as I mentioned before, the reason why I was looking at this level was because of what happened over here with this low, as well as this low. That area provided me with a level of support on two situations. So I knew that that level was going to be an important level once price came back down into it. So what we needed to happen was price to come fairly sharply down. We didn't want something where price was just coming down like this and then just gradually gets to the line and then hits. We wanted something that was looking more like this, a little bit more of an angle, so that when this price does get hit, it's going to provide a base for a good bounce. So as we see, that's what happened. Price came up all the way up to that $20.50 area, which is where I took my final sale of that position and made a nice chunk of change. So Intel, this chart played out. It's continuing to play out, has that movement, as I mentioned before, all the way back up to about 21. And here, I'll get this back down. Back up to about $22 to $21, or right there, 22.
And you had a couple ways, you know, you could have played this, right, Drew? So you could have, so you were long.
I'm sorry, right
That's
here.
all right.
Yep.
Yep. So you were long here. Let's just see. I'm gonna restart there. Okay. So you were long down here.
Correct.
You saw that this neckline here, right? So here's the neckline.
Yep.
All right. So you knew that this was likely to be an area of resistance. And look at that, perfect area of resistance.
Right.
Now what you could have done, right, is you could have put a stop loss here, right? Right as it got up to this area, put your stop maybe below this candle low there. And because what could have happened is it could have gone up, retraced and moved higher, or it could have just gone straight up. So that way it would have locked in your gains and allowed you to have upside, even further upside on a very powerful bullish pattern, right? So,
correct.
But in this case, you decided to take profits. Great profit level, right? Now, where's another part that you could have entered on this trade, right? So you broke out and then you retraced.
Yep. Yep.
What about adding on what about re-entering on the retrace here?
You certainly could have done that.
Uh-huh.
You could have also, this trend line that extends back here. All right, this trend line right here that extends back to the low, I was also looking, had price come back down to it to re-enter the trade here, because it didn't fully break that head and shoulder neckline where I took profit. And so what I was doing was being patient. I had already drawn out all these head and shoulder patterns in the trend lines, so I was waiting for price to get right back down here, and it never did, as we see. So that was one area that you could have entered. Now, hindsight, looking at the charts, knowing that it did go up the way it did, the first major area of support from this move down from the head and shoulder neckline would have been right in here. And as you see, that's exactly where price went. So price went up, failed from getting through the head and shoulders, came back down, retested this area of support. It did not break through. What would have been perfect for me is if we would have had an angle of trajectory very much like this and just coming right back down into here. And then that would have been an awesome buying point. We were looking at a price right around $19.60. So then I would have done a couple things. One, I would have already taken profits, but then two, I would have had an entry point right here and with a baseline of support of this trend line with a third hit. So those are almost kind of like the sweet spot of a trade. When we hit that number on a trend line, the probabilities of a successful trade that we're looking for with this type of velocity move are very high. You're talking 80-90% success rate. Of course, nothing's 100%. I would never go all in a situation like this, but these patterns that are displayed to us help us to navigate the trade as well as to calculate odds as to the percent chance of this trade working out.
Awesome, awesome. Let's talk about your SMCI trade. And I know we're going to be talking about your winning trades today, but maybe next episode we can talk about your losing trades, right?
Sounds good.
Because that's where you learn the most, right, is on your losing trades.
Yeah, coincidentally enough, everybody thinks that, hey, what's your best trade? That's not always the case when you're a trader. The trades that stick with you the most are the ones that you lose on.
That's it.
We make so many successful trades each and every week. And they often get forgotten, but then the ones that you lose big on, you're like, oh my gosh, what did I do wrong here? It's almost like something you need to learn to get over because it's part of the game. Just like anybody playing sports, you're not going to win every game unless you're UConn women's basketball team for several years there. But other than that, I mean, the game, you're going to have a winner and a loser. And also draw in some sports. And sometimes that's the case for us too. We'll have stop outs where we'll take a break even, but we're going to be a winner or a loser in this trade. And so there's something to learn from both sides of that coin without a doubt.
Very good points. Yep. Let's take a look at your SMCI trade there.
All right. So SMCI, I've talked about quite often already on some of the shows. Reason I do so is because, again, this stock's just got an awful lot of volatility. So what do we look for? Very much like what I described with this Intel chart. We look for volatility when we're about to enter a trade. We want to see stocks moving up quickly or moving down quickly, especially into levels of support. This stock can give you a lot of moves. Typically $50 is about a good variance on SMCI. This stock can go up over $100 in a day without a question, without even blinking an eye, and it can drop over 100. So that $50 variance, you really need to go light in trading SMCI if you're going to do it in a swing like what I did. So let me show you what I did this last week. One of my plays I really enjoy doing is towards the end of the trading day. Oftentimes the stocks and the charts give us signs about what's to come, and we can get more analysis done at the end of the trading day. It gives you a better conclusion as to what just transpired throughout that day. And again, it's a solid event and solid statistic of where that price action closed. It's very important. Anyway, so what I did, I looked at the SMCI daily chart. We had this huge drop that concluded there on August 5th. We had a massive drop even further if you're going to go back further on the SMCI chart, all the way from $1,200, and we'll do that in just a second. But just to highlight how I got to this trade, I'll show you this. So we have a number of trend lines here right now. I want you to pay attention just to the candles. The candles, we have 1, 2, 3, 4, 5, 6, 7. So we had 7 days of upward movement in SMCI. This was a very big move from $478 all the way up to about $627. So a very nice increase, about $150, which is almost 30% of this stock. So just as I described before, we're looking for these rapid movements one way or the other to kind of signal to us something's about to change. And another factor that I got was this narrow body bar on the 7th candle. So this, when you have a time count with a narrow body bar, it's almost like a flashing light signal that the market is giving you. Something is about to happen. That doesn't mean stock's going to completely roll over and go back down to new lows, but what that says is that price action is likely to stop or at least pause in its upward movement, if not turn around slightly, and that's what we were able to do, and I was able to do to capture a trade on this. So I first executed the trade towards the end of the day here on Friday. I started entering a short I was short, I think my average was 615 to 618.
And let's go in a little closer, Drew, just maybe to the 10-minute or the 1 hour.
Sure.
Let's just see exactly where you entered, why you entered.
All right. So here we have Friday. I noticed right
just
around.
Make sure you click the screen there.
Oops. Yep.
Yep.
Sorry about that. All right. So we've got Friday's price action. We opened right here, went up, and just flatlined for most of the afternoon. Now, this flatline could mean a lot of different things. It could mean bullish consolidation. It could mean that price was looking to bust through this area on top, which it very well could and still could do. But what did I notice? As I mentioned on the daily chart, we had this time count and price action did close right here with a narrow body bar. So knowing what I know with our patterns and factors, I then zoomed further back out on the daily chart to get an idea as to what to expect with this sort of sharp movement into the 20 moving average. I have these three trend lines here. You see the yellow one right here is the 20 moving average, the blue is the 50 moving average, and the red is the 200 moving average. So what I did is I went back to when SMCI was making its massive run earlier in the year, went all the way up to $1,200. Then you see price action came back down, broke this 20 moving average right here, continued down further, then it came right back up into the 20 moving average. Very similar to the move that we have right here, almost similar angles. This one was even sharper, but you can see this came down 1, 2, 3, 4, 5, 6, right into that line. Price action could not get above the 20 moving average, got rejected. Made another attempt, got rejected. Even further down, hitting now what's part of our other long-term trend line, went back up, got rejected again. Now keep in mind the 20 moving average is not a major resistance line, especially when you're considering the 50 or the 200. 20 is one that's violated the most often, so it's not a surprise for price to get through something like the 20 moving average. So I had this time count, I had history showing me how SMCI reacted when it's coming back and striking the 20 moving average for the first time beneath. It's important to note too, this movement up all happened above the 20 moving average. You can see from this point of violation, we never really got back above the 20 moving average with any sort of staying power until right here. And so in essence, this little area equated to this area of movement above the 20 moving average. So then it was like the clock restarted. We dropped back down beneath the 20 moving average, continued to drop further, and came down to this 478.56 level, and then generated that 7-day time count, moving up right into the 20 moving average. The pullback we got today, as I said, my average was 618. I thought it was 615, but it was 618. And I had an order put out earlier in the day to cover this short under that $600 level. As we see, price got down to 590. Price today opened up a little bit lower, then came back down under $600. So with just a few amount of shares, I was able to make a couple $100 off a very simple move at the beginning of the day that you see generated right here. Right here. So right here is where I took my profits. I entered my short at 618, so it was right around this area. So it was a movement almost like a bullish flag, but what this area was making when the price was coming down was creating that daily narrow body bar. So I was really concentrating on the daily close. Last Friday, there was an awful lot of stocks, including the indices, that closed at very peculiar levels to tell us about what was going to happen this week. Keep in mind, last week was options expiration, so I didn't know how much I was going to trust those closes, so we're watching very closely today moving forward through this week on the price action.
That's great, Drew. Yeah, so all right, so you entered here, right? So you entered short somewhere around here, and then you took profits here. I imagine you didn't catch the absolute low, right?
That's correct,
okay.
Yeah, I had it, my buy order to cover the share short right under $600.
Okay, so you're looking at the even number, right?
Correct.
That $600 even number.
Correct.
And by the way, when you're investing, when you're trading, even numbers, right, really are helpful to understand where a significant bounce or pullback will be, right?
Yep. It's a psychological level, and it really works nearly every time. So
amazing.
Just watch that on the charts.
Yeah, it's amazing. So you took profits here around right under 600, right?
Correct.
So price continued a little lower,
Yep.
right? You're rarely going to catch the tops or the bottoms. If you do, it's lucky, right? We've learned that. And so that's awesome. So you had a nice trade there. That's great.
I got roughly $20 per share on that trade. If you can take $20 a share on SMCI every week, and you'll find these patterns, they're in the charts every single week, every day even. And SMCI, even though we've had a couple losers with them in the past, this stock continues to generate volatility, that if you can find these patterns, just take $20 a share here, another $20 a share, even a $5 or $10 per share, it all adds up. And so these are smaller trades that I make throughout the course of the week. That's really helped my portfolio this year.
That's awesome, Drew. Well, look, we have to get to the trading room in about 10 minutes here. So why don't you go through just for a minute or two each on the SPY and SMH, what you're looking at there.
Sure. So we look here at the spider chart. You can see a little bit more drawings going on here. But what I did want to do to point out with the spiders, we see, here, let's zoom in just a tad. We see, here's the August 5th low on the daily of the spiders, right here. And since then, we have gone up very nicely, broken through this downsloping trend line, gapped above it, and then closed here on Friday. This close was above this previous day high. I was watching that very closely. What that close tells me is that we have more option for upside movement. So with that being said, I've got this upsloping parallel channel, the smaller one that begins back this year on April 19th, connects through a pivot low on August 5th, and then there's a pivot high there on July 16th. This smaller upsloping parallel channel looks like where price is contained at the moment. Should price continue higher on the spiders, we're looking at first stop on the top end of that parallel channel around 571. But there is a gap fill right near the all-time highs as well, and a huge gap window. So with lighter volume, there's almost no reason why this price action can't get a little bit higher up into this downsloping parallel.
Yeah, I like it. I like it.
I think for the most near term, that's likely where we're going to head.
What is that, around 570? 560?
Yep, 570, 580.
Okay.
You're exactly right. So, but if I go further out, I go further out in the charts, I want to kind of show you what I'm looking at in a grander scheme. All right. So you noticed here we're on the weekly chart now. All right. I've got a couple different parallels that are all going different directions. Thanks, Doc.
Sure.
We've got here, I showed you the smaller parallel that we're in right now on the daily chart. You can see price still moving right here, and this is that 570 level that I discussed earlier. But here's all the way back to the COVID low. So what I did, I created a parallel all the way through, connected this third pivot point top that we had right at the end of 2022, and you see that price action, should price continue to move forward, even break through this current parallel that we're in, we could be moving much higher on the spiders.
Well, I think, I actually have a similar parallel line here, and I've actually been penciling in potentially, right, let's just say, maybe 610,
right,
620 on the S&P.
Right.
So if that happens, this would be a great time to enter into some puts on the S&P, because the likelihood of it moving up higher is so low based on, where it came from here in COVID, the lows of 2022. This run, I think, would probably be, what is this, around 360, and this is around just over 600, so almost an 80%, 90% move.
Incredible.
Yeah.
In just a couple year time frame.
Incredible.
One other thing I did want to point out about this spiders chart, actually there's two things. One, I ultimately think, and I don't know when that fall is going to be, but I ultimately think price comes right back down. You see, here's the pre-COVID high. This, if you extend out price just over to the low here in 22, make another parallel, price needs to come right back down into this area. This is almost like a retrace to the scene of the crime that it broke out. So just under 500, right around 490. I think that's a place that eventually price is going to come to. And this is an upsloping parallel, so this can be extended out. So price may, depending upon how and where it goes, this area is at least, it's going to be tagged at some point. I still think the stocks could continue lower, but eventually this is going to get done. It's going to get hit. Another thing to point out that I found in doing some research, and I'll zoom out just a tad. But if you take the lows from the COVID and look at the run up, we have had about 650 days moving up. Now it's hard for me to get exactly on that with this larger time frame. From this low right here to this high, it's about 644 to 651 days, okay? So then from this low to this high was also 644 to 651 days.
Interesting.
I think that's a very unique coincidence, one that I pay attention to very closely because markets tend to make the same move twice. They tend to repeat. So a lot of things going on here. It was very important for me to watch how the markets closed on Friday. Just because, again, we're moving higher and we're confirming these moves higher. So that almost leads me to believe that we're going higher on the charts. However, this pattern is showing me that time is up, that our moves already happened and we need to have some sort of pullback. And the pullbacks aren't the end of the world. It may be just gaining steam for another move higher. But right now is really an interesting time, and time is really pivotal for this because the clock is ticking and it almost seems like time is up, especially with what's happened in Japan, more focus on our currencies, geopolitical implications with different wars going on, interest rates, gold at all-time new highs. That would imply too that there's a little bit more hesitation to go risk on. However, the stocks are going up. So all of it's a little conflicting, so we're paying attention very closely to see what sort of other flashing signals we can receive on the charts to alert us so that we can alert you guys as to what's going to happen next.
Drew, that was fantastic. You know, we're just about a minute and a half away from the trading floor, so I'd like to keep you on to talk about the SMH and IWM. Obviously, we'll have to have you back. So
I love it.
Thanks so much for coming.
Thank you, Dr. B, having me on the show.
Yeah, anytime. We're going to end it right here, guys. So that was a very awesome episode of the Market Pulse. If you haven't seen the previous episodes, go back. There's a lot of education there. Please go back. There's probably about 25, 30 episodes. And we'll do this more often. We'll talk about our trades. We've seen the comments. People would like to see, what we're trading, our wins, our losses, our break-evens, our mentality, our thoughts about, why we're taking the trades, why we're stopping out, why we're exiting, so things like that. So again, thanks for tuning in. I'm Dr. B at Verified Investing. Drew Dusk, thanks again for coming. And we'll see you again next week on the Market Pulse. Take care.
Sounds good, everybody. Thank you.